Gusto rin tiyakin ng mga empleyado ng nagsarang Banco Filipino na may makukuha silang benepisyo.
They wanted to make sure that when the police will arrest me, they will not be lenient on me. And that because I was a former.
For the people who worked at and patronized Banco Filipino, it seemed like any other day, but they had no idea that the bank they trusted was going to collapse. The fall of Banco Filipino may be traced back to the bank's pursuit of quick growth, a common storyline that tempts financial organizations to overextend themselves in the sake of profit. The bank, which had been in operation since 1964 and was formerly held in high regard for its commitment to the local community, fell prey to the same temptations that had sunk competitors. The collapse of Banco Filipino was a stunning and far-reaching event in the history of finance for Philippines. This once mighty organization in the Philippine banking sector collapsed like a house of cards, leaving in its wake a wake of broken hopes and lives. The bank's failure sent shockwaves across the economy, revealing pervasive systemic problems and sparking a national discussion about the need for regulation, the importance of good corporate governance, and the fragility of the financial system. Banco Filipino, established in 1964, is a venerable Philippine financial institution. It had survived several adverse conditions and economic downturns, becoming known for reliability and stability in the eyes of its customers. But fissures started showing up underneath the successful exterior. The bank's problems with faulty loans, poor management, and dubious dealings became gradually worse over time. As the pressure mounted, Banco Filipino eventually collapsed, leaving its customers, workers, and investors in a state of shock and astonishment. The failure of Banco Filipino did not happen out of the blue. It was the end result of years of carelessness and blunders. Regulatory laxity, insufficient risk management, and a lack of corporate governance were all cited by experts and observers as reasons for the bank's failure. Thousands of bank depositors lost their life savings, companies failed, and countless others had their lives turned upside down in an instant as a result of the repercussions. The shockwaves were felt far beyond the financial sector, damaging public faith in the same institutions that were created to protect the riches. The 1985 closure of Banco Filipino. Millions of Filipinos, notably first-time savers and those with minor accounts, were upset by the bank's collapse. Banco Filipino was widely regarded as the safest and most trustworthy banking institution in the Philippines. However, Banco Filipino was forced into bankruptcy after an insolvency declaration by the Bangko Sentral in 1985. Before it permanently shut down, customers had the opportunity to cash out their funds, when the Supreme Court ruled in 1994 that its closure was unconstitutional. It reopened. Even after reopening in 1994, Banco Filipino was never the same. Its national network of 92 branches saw just 15 of them reopen. Because of its shutdown in 1985, it lost billions of dollars in assets and millions of customers. Subok na Matabe. Subok na Matatag was the catchphrase of the now reopened Banco Filipino in 1994. Ironically enough, a lot of people were reluctant to place their faith in a bank that had already cost them billions of dollars, and the motto had become a melancholy reminder of the bank's previous brilliance. Banco Filipino's second shutdown. Through the 90s and 2000s, Banco Filipino struggled around as a less popular option to other banks in Metro Manila. The brown furnishing from its 70s heyday is still on display at the company's headquarters. The Happy Savers Club was also revived, albeit with much less success than in the past. Mismanagement was another issue at the bank. Banco Filipino was again closed by the BSP in 2011 on account of the bank's allegedly enormous liabilities relative to its assets. Banco Filipino's chairman and president Teodoro O. Arcenas Jr., vice chairman Albert C. Aguirre, executive vice president Maxi S. Abad, directors Orlando O. Sampson, Adelaida C. Adurubaman, Francisco A. Rivera, and Raymond E. Montano, executive vice president Catherine Aguirre Hernandez, and Senior Vice President Robert Affable were all charged by the BSP for allegedly taking out former Banco Filipino executives were sued in 2011 for allegedly risky business operations. The bank was led by Perfecto Yese, a former Secretary of Foreign Affairs. The failure of Banco Filipino may be attributed to a number of events that led to its financial woes. For instance, poor administration and risky lending practices, aggressive lending practices, and a lack of responsible risk management contributed significantly to the demise of Banco Filipino. The bank made risky loans to fast-growing companies without proper risk analysis or protections so that it might maximize earnings. Banco Filipino gave in to the temptation of quick profits at the expense of proper banking, leaving the bank with a portfolio full of poor loans and unpayable debt, problems with regulation, and unauthorized behavior. The authorities tasked with monitoring and intervening in the financial sector were powerless, while the bank engaged in dangerous lending practices. The Central Bank of the Philippines, which is responsible for ensuring the health of financial institutions, missed the mark when it came to identifying and fixing the fundamental problems at Banco Filipino. Bank officials were found to have engaged in fraudulent actions, such as falsifying financial statements, hiding losses, and transferring cash, according to subsequent internal investigations. These actions did even more damage to the bank's finances and credibility with its depositors. Leadership and governance failures. The downfall of Banco Filipino also exposed problems with the bank's leadership and management. The bank suffered from a lack of openness and accountability, with power being held by a small group of people. Due to a lack of controls, irresponsible decisions were made that endangered the bank's long-term health. The inability to develop a culture of honesty and poor governance were major factors in Banco Filipino's demise. External factors and the slowing economy. Banco Filipino's demise came at a bad time for the Philippines since it coincided with the country's economic slump. Increased default rates and a decrease in economic activity were two results of the global financial crisis of 2008. Banco Filipino's financial vulnerabilities were exacerbated, and its capacity to recover was hampered as a result by these external circumstances. The arrest of Prefecto Yasay. After getting imprisoned for alleged unfair practices at the savings bank he had headed, former Foreign Affairs Secretary Prefecto Yasay Jr. maintained that the bank's liquidation was illegal. On the 22nd of August, officers from the Manila Police District showed up at Yasay's home with an arrest warrant issued against him in a case that began in 2011 while he was a director of the now-defunct Banco Filipino Savings and Mortgages Bank. Yasay, a former head of the Securities and Exchange Commission, and 9 other officials at Banco Filipino were charged by the Banco Centraling Pilipinas (BSP) with breaking banking rules and regulations after they reportedly accepted self-serving loans totaling $192 billion. Banco Filipino was closed by the BSP's predecessor, the Central Bank of the Philippines, in January 1985 when it was determined that the thrift bank could no longer be profitable. The bank has become bankrupt, the Monetary Board has determined, and would involve probable loss to its depositors and creditors. Banco Filipino's appeal to suspend the Monetary Board's closure was granted by the Supreme Court. The central bank's financial assessment of Banco Filipino was incomplete. In December 1991, the High Court ordered the central bank to reorganize Banco Filipino and let it take deposits and lend again. The BSP closed it again in 2011. Desperate in finding a way out of the terrible mess they created, the central bank became the BSP in 1993, according to Yasay. This fake solution was anchored on a legal fiction to enable the despicable avoidance by a vital government agency of its responsibility and accountability, most especially to the poor depositors and the general public, Yasay said on Facebook. Thus started the BSP's deceit and bald-faced fraud in presenting itself as an independent body that was not the successor in interest of the Central Bank of the Philippines. This is why it arrogantly claims that anyone suing the BSP for the illegalities and corruption of its predecessor can do so until hell freezes over, he continued. Yasay accused the BSP of irregularly and unlawfully engaging Cruz Marcelo and Tena Francia to persecute Banco Filipino till this day. CNN Philippines requested BSP reaction. The central bank declined comment, citing the sub judice rule that prevents parties from discussing the matter. Yasay was released on bail after posting a $240,000 bond. The fall of Banco Filipino is a sobering illustration of how easily the financial system may fail and how catastrophic the consequences can be. It revealed the industry's inherent shortcomings, which prompted a reevaluation of the need for more stringent rules and more control on a national scale. This was all about Banco Filipino. I hope you liked this video. Don't forget to subscribe to our channel and make sure to hit that like button. See you in the next one. Till then, stay safe.